Hi everyone, so we're back here again in this restaurant. We really love it. We cleaned the plate the first time and this is our second time. We will show you what we had tonight and it's super delicious. So try this restaurant. Today we're going to discuss how to qualify for commercial versus residential, what's the difference, and also what are the terms. So we will discuss that on this video and I hope you will learn something.
Okay, great, yes.
Hi Richard, are you
Hi
full?
Zonna, yeah, I am stuffed. I am really
I
stuffed.
know, me too.
It was good food here.
Yeah,
We came back here again.
Tell us about what are the qualifications in
Sure.
getting commercial.
Yeah, commercial
loan.
loans versus residential. Most people are familiar with the residential loan qualification. Usually on a residential loan, the bank will look at the borrower's information, their credit score, their income, what kind of debt they have. However, on a commercial side, looking at the borrower is secondary. They look at the property and what kind of income the property will generate. So they look at the cash flow, so the gross income minus all expenses. So now what the lender look at in a commercial loan is they look at the debt service coverage ratio, which they call DSCR. They're looking for at least 1.25 or higher, meaning if it's lower than 1.25, then either you have to put more money down or readjust the price, like that. But to calculate the DSCR, you take the net operating income, divide that by your debt for the total for the year, and if it comes out to 1, that means it's break even. If it comes out to less than 1, it means you are losing money. You don't want to be in that situation. If it's over 1, means at least you have some positive cash flow. Higher the number, the better. The lenders are looking for 1.25 or higher for that particular ratio. And then there's a cash-on-cash return. It's a good number to know for investors.
If you are getting a loan through a seller carry, there's more ways you can cut out the terms that the banks would give you. So if you could find a seller carry to finance the commercial deal, that would be one of the best way to do it.
That's the best way to do it, actually.
Yeah, because if you do a typical, commercial loan, there is also prepayment penalty.
Yes.
You have a lockout period where
That's right.
you are not allowed to sell the property, and for buyers who wants to buy this property, you have to make sure to check that. Sometimes there's reason why they want to sell before the due date, so they can get charged with prepayment penalty, a hefty amount. The longer you keep the loan, the lower the prepayment penalty.
Right.
So you want to know this information before signing on the loan. For the most part, it's 25 to 30% down. Yeah, mostly a lot of them are 30% nowadays. 30%, the lenders are feeling more confident.
Yes.
Usually with commercial loans, your first 3 years, you would be only paying interest only. There's an advantage to this because, of course, you are just starting the business. The first 3 years is tough and you needed more of that money in your pocket to keep it going. So they understand this thing. They are doing this for a reason, to also help you out and help them to make sure that we have a win-win situation at the end. If you have a lot of money to just pay cash, you can discount some of the properties. Right now, California, a lot of commercial, they are saying that there's a commercial crash happening. We do see a lot of commercial up nowadays. Everywhere is for lease. A lot of businesses are closing and have closed due to what happened in the last 2 to 3 years. Multi-family, of course, people always need a place to live.
Exactly.
So it's probably a better idea right now, but it's a good time to at least prepare yourself, and possibly we might be able to buy lower valued commercial properties, since a lot of buildings are emptied out right now, especially here in California. I've been seeing a lot lately this year. If you see a lot of empty parking lots, and the big building, so that means nothing is really going on in that building, and pretty much, you know, it's for lease, vacant or whatnot. Yeah,
Yes,
there's
in
a
the
lot.
retail sector, yeah, we'll see
Yeah,
some
there's
of
a
that.
lot
Yeah.
right now because of the changes, what's going on with the economy. It has an impact. But for an investor, if you have been putting your money to the side, I think pretty soon it might be a good idea to start moving it and start watching the market, because you can find a good deal on these properties that in the future there is some potential that it's just go, or real estate just go up and down, up and down. It can't be all down, down.
Or up, like it happened the last couple
yeah,
of years.
it's
Yes.
mostly a timing. When it goes down, it goes up. When it goes up, it will go down. So it's just a timing your investment.
Exactly.
Yeah, if you could find a seller financing deal, it's
Oh,
one
yeah.
of the
That's
best,
the
because
best.
the credit doesn't matter. A lot of things doesn't matter, and
Lower down payment.
yeah, and the terms, and
Mhm.
what's just really matter is that the seller will be able to trust you.
Exactly.
At least with commercial property, for the most part, when they loan you that money, whatever your mortgage is, they usually want that to be at the same level of your net worth. So they will want to look at your net worth at least.
Exactly. Oh yeah, that worth. Yeah.
So they consider that. So there is a
if
lot.
you get bank financing. Yeah.
Yeah, there's a lot of qualifications that you need to show.
Exactly.
And if you are also getting a small business loan, it's good because you can have a lower down payment. You don't need to
10%.
come up with 30%. You can close the deal at 10%. But then you have to show almost perfect credit score. You have to show that your business has been doing well for many
Yes,
years.
you have to prove
so
income.
yeah, prove income and the future of the forecast of your business.
Exactly.
They also want to consider that. Yeah, have closed some of those deals with the building itself. So these are all possible.
Yes.
Yeah.
If you get an SBA, you can put 10 to 15% down. Not the 25-30% down required on a commercial.
You can also get SBA loan on like the car repair or this kind of businesses.
Yes,
So
yeah,
and with
businesses as
buying
well.
the building itself, because I've sold some of those. You can have a bakery, a tire shop, or and have an SBA loan and do that.
Yes.
Yeah. So
Totally possible.
yeah, so these are all possible, and there's always it's just a matter of starting and doing it with the right people you trust.
Exactly.
Yeah, so, and people that you like to work with, and
That's right.
yeah, because it can be a long process, because closing commercial deal is not like closing a house. 30 to 60 days, 90 days sometimes it takes for the house the most, right? Average commercial can take years, 2 years, 3 years to even just close one
Depends
commercial
on circumstances, but yes, it
commercial
can take a long time.
deal. Yeah, it is long because the loan process is long, especially when you are selling the building at the same time the business. It's always faster with cash money, but yeah, commercial it can be different.
Usually, if you once you're under contract on a commercial, you can close
Depends
within
on-
45 to 60 days, depending on if everything's good.
Yeah,
if
that's
there's issues with the property,
that's more
then
like
it might
a
take longer time.
multifamily.
Yeah.
Yeah, that's more like a multifamily. Yeah, but if you are selling commercial like gasoline stations.
oh yeah, those take a little long because of
Yeah.
the environmental issues that you
Yes,
gotta overcome.
yes. Building like establishment,
Office
with
buildings,
business.
yeah, those are
Yeah.
It might take a little longer to get into escrow.
Yeah, multifamily
But once you're in
is,
escrow, then 45 to 60 days is a tight schedule, but you can close within that time frame to 90 days. However, if you're doing industrial or
yeah.
gas stations, for example,
Yeah, it takes
yes,
years. Yeah, I've
because
closed those.
There's other,
Yeah,
because
and
there's other
just
factors
for
involved.
negotiation, sometimes it can take back and forth. Just for
Yeah.
the negotiating is 1 year
Exactly.
to get the deal together, back and forth, and then takes another 1 to 2 years to close it completely. So that's industrial, commercial, with big building and
Exactly.
businesses. together with it. Multifamily can be faster and easier, you know, because there's not
warehouses, strip centers
yeah,
can be
and
faster,
especially
quicker.
if it's vacant or if there's tenants, the only headache would be, you know, to prepare the rent roll and make sure you double check the rent roll is whatever
Yeah.
the seller is writing is really what it is. Yeah,
Checking the expenses is critical. You gotta get the right numbers.
You gotta get
If
the
you
right
miscalculate it, then you can miscalculate on
Yes,
the
that's
price.
the tricky part
Yeah,
with buying
that is.
businesses and commercials. Sometimes not
Sellers will
sometimes.
not necessarily know, or whatever
Yeah.
they report, it
Yeah,
might
yeah.
not be the right information.
Yeah.
So that's why getting the correct information is very critical.
Yes,
In
yes.
properly making structuring an offer.
Yeah,
actually.
so there's a lot of components to dealing with commercial deals compared to just buying a house.
Exactly.
And yes, experience and people that know how to close and put together the deal would be the best bet for you. Hi,
Enjoying dinner.
Rich.
Hi, Zonna. How are you?
We're back here again. We love this restaurant.
Yes, we do.
Yeah,
It's
Richard
very
loves
good.
it. It's his request the second time around.
That's right.
He said, let's go back. Let's go
날 위해
back.
던질 때 널 지켜줄게.
Coconut ice cream.
This was good last time.
Yeah, it's so delicious.
Wow.
What is this?
It's banana foster. It's a grilled banana with the caramel sauce and
Wow.
vanilla ice cream on the middle.
Oh, wow.
So good.
Looks so
Yeah.
delicious. What about this?
That's one the dessert sample. It's a mango sticky rice with coconut ice cream and the roti. Roti is a flatbread with condensed milk and sugar.
Oh,
Crispy
wow.
one.
What is on top of the sticky rice?
It's a mung bean.
Yeah.
Crispy
yeah.
mung bean.
I made that at home. Thank you.
You're welcome.
Thank you.
So that was a good topic and that was a very good dinner. I hope you enjoyed watching the food that we shared and check it out. Thank you for watching and we'll see you again on our next video.
Okay.
Bye-bye.
Bye-bye.